And one of the things that Basis offers is a shared culture with the bank that we take care of their clients. Simple things like return phone calls, answering the call within 3 rings 97% of the time. Approval, considering that there's a bank relationship. Some clients are a little harder to get approval for because we are accepting money and we need to make sure things are good. Financials have to be solid. Having their bank behind them can be a differentiator. And the bank needs to know that if things don't go right, the bank is probably going to take the blame for what the processor did. If there's ever fraud, funds can be on hold. This is no longer just another product. It's now an urgent and the only product that matters to that client of the bank. So if we do good, there's really no, woo, we did it. But when a processor messes up, everyone in the bank knows.
While most financial institutions see payment processing as just a commodity service, the smartest ones are realizing it actually is their secret weapon for strengthening commercial relationships, boosting non-interest income, and building a real competitive advantage in a growing market. Here's what might surprise you. Banks that excel at providing merchant services not only keep their clients longer, but also become essential partners in their clients' success. Conversely, those that fail to do so unintentionally push profitable businesses' relationships right into their competitors' hands. On this episode of Bank and Transform, I'm sitting down with Brad Odo, CEO of Basis, a payments partner known for award-winning support, a white-labeled approach, and an ability to unlock revenue and relationship potential for financial institutions of all sizes. We explore why merchant services are often overlooked, how banks can transform them into a strategic growth engine, and what the future holds for payments innovation. If your bank isn't rethinking merchant services right now, you may be missing out on the most powerful levers for growth and retention. So welcome to the show, Brad. Before we begin, can you give us a little introduction about yourself and your company?
Sure. Well, thank you, Jim, for having me. I appreciate being here today, and I'm looking forward to this. I'm Brad Odo. I am the CEO and founder of Basis Processing. We are one of the largest financial technology payments integration companies in the country. Been doing this for a little over 20 years, and I've also been with my wife for about 25 and a dad for 23 of those years.
Well, there you go. You know, Brad, as you mentioned, you've been in the payments industry. I won't go through all the different years you've been, but you've been in the payments industry for over 2 decades. How has the role of merchant services in business banking actually changed fundamentally? And where do you see the biggest opportunities today?
The industry has changed a lot. In the 20 years I've been in, fundamentally, it came from an industry where when I got in 20 years ago, everyone was a potential client of the banks. Everyone was a potential client that we could talk to and call on because we had individual point of sale equipment, little terminals that we would swipe our credit cards through. And it was great because everyone was there. And we had these good old terminals, these Trans 330s and Zon Juniors, for those of you that have been around in the industry for a while. But that has changed. And nowadays, everything is based upon industry-specific point of sale and industry-specific ERPs. And if the banks are not changing with this technology and have a partner that has custom integrations and the ability to work with these very specific softwares, they are going to get left behind. So that's why we've invested 8 figures in the last couple of years, developing our gateway and our APIs to integrate into these point of sale terminals and ERPs. So that way we can move forward and be a part of the future.
You know, it takes me back to my days in the beginning of banking. One of the places I had to work with and my rotation program at the bank was actually going business to business, taking the terminals in, trying to get them as a customer and try to be the processor. And as you mentioned, as the introduction reference, you know, it got into be a commodity business without much revenue potential. Therefore, most bankers, or banks, I should say, and credit unions walked away from the business. While most banks still see merchant services as just another product to offer business clients and maybe say it's a must-have as opposed to a want-to-have, what are they missing there? What are they really losing out on?
There's a lot more to than it being just another product. One of the things I want to think about whenever we are lucky enough to work with a bank and partner with a bank, we realize that we have the bank's reputation in our hands. And when a bank refers a customer for a very important product, I mean, let's think about it. The processor has the money before the merchant does. That's a pretty important rule. And a lot can go wrong. And from time to time, things do go wrong. That merchant wants to know that they have their bank behind them, and they want to know that they have a good, reputable processor that's going to take care of their service. When's the last time you heard somebody say they went with the huge, large, biggest of almost any company and said it was great service and they loved them? No, most of the time when we're talking about the largest banks, they have a bank branch on every corner and a 20-minute wait list. That is not why clients sign up to work with banks. Right. So that's not who they want as their merchant processor. They want a shared culture. And one of the things that Basis offers is a shared culture with the bank, that we take care of their clients. Simple things like return phone calls, answering the call within 3 rings 97% of the time. Approval, considering that there's a bank relationship. Some clients are a little harder to get approval for because we are accepting money and we need to make sure things are good. Financials have to be solid. Having their bank behind them can be a differentiator. And the bank needs to know that if things don't go right, the bank is probably going to take the blame for what the processor did. If there's ever fraud, funds can be on hold. This is no longer just another product. It's now an urgent and the only product that matters to that client of the bank. So if we do good, there's really no, woo, we did it. But when a processor messes up, everyone in the bank knows. So when they talk about it being just another product, it's actually everything. It's an extension of the bank's reputation.
So why do so many banks and credit unions find it difficult to make their merchant services programs successful or beyond just basic? What are the most common pitfalls you've noticed in the industry recently?
That's a great question. Yeah, one of the biggest pitfalls we see is the one size fits all. And that doesn't work. It probably never has worked, but it kind of did. When I first got into the industry, there was a handful of terminals. Now there's an infinite number of industry specific point of sale equipment and the terminals. So it has gotten much more complex. And I see a lot of the pitfalls is trying to keep up with the complexity of the industry, trying to keep up with the terminals, trying to keep up with interchange. What is required to get the lowest possible rates of interchange for our merchants? And the other big pitfall we see is that banks are locked out of the newest technology. That's why when I was talking earlier about spending 8 figures to build a product so we can integrate with these other point of sales, if your bank doesn't have a partner that can actively do these integrations with your clients, they're going to get left behind.
Yeah, it's interesting because as the data analytics and all this processing has become so much faster and so instant, there's a lot of perspectives here. I look at the services that the banks and credit unions used to offer, a wide range of everything. They've slowly but surely either gotten rid of some, they've increased others, but these things change over time. And what's really important to realize, and I've seen, is that every service you don't offer is a service one of your competitors are going to offer. Correct. And those competitors have gotten better and better at offering services that they weren't allowed to offer in the past or didn't want to offer in the past. And I call it silent attrition. We have more and more of that going on in the industry where we go, yeah, they left on that reason, or maybe we don't think they've even left. That merchant down the street still keeps their deposit services with us, maybe still has a loan with us. But the reality is part of their business has walked away for one reason or the other. From your perspective, what's the real business case for banks to prioritize merchant services beyond the obvious revenue share? What strategic advantages are forward-thinking institutions actually gaining now?
Jim, you brought up a great point. And one of the things that all banks need to consider, if they don't lead in every area that they offer a service to a client, that allows a foothold for a competitor to get in. We have several of our bank partners use merchant as a lead to open up the door. It's the first service they get in because we are a wholesale processor and our costs are absolute wholesale with the card brands and no one has lower costs. We can be as competitive as we need to be and earn any business that we need to. So those bonds with the merchant are going to be stronger the more offerings that a bank can give to them. The other part of it that's really important is the real business case for having a very solid merchant card program, not just that you can check a box, we've got it. But I go back to it being the reputation of the bank. And when they are working with us, one of the things that we always like to talk about is net promoter scores. Net promoter scores are getting more and more common in the industry, but for a couple of your listeners that this is a new concept to, it's the likelihood of a client to recommend you your services. So a 9 and a 10 is a positive. And then you have the negative scores and you have those in the middle. So what we see is anybody above a 75 is in the top 1 or 2% of all companies in the country. We consistently rank above 75. And this is a tough industry because, like I said, there's a lot of issues that can go wrong and things that go on. So when a bank is picking a partner, the first thing that they really want to look at is what is the reputation of that merchant processor, and look at their net promoter score. What are their clients saying about them? Because that tells everything. We're in an industry where many processors have negative net promoter scores, meaning more of their clients say, do not work with these people than say, do work with these people. So being in the top 1 or 2% of all companies with our 75 plus net promoter score is very important. I think the other thing they want to do, the real business case for having this, is to make sure that their partner they align with is like them. I doubt every regional bank and community bank I've ever worked with, they take pride in the fact that somebody answers the phone call and it doesn't go into a call queue forever and they're not waiting online for 20 minutes. One of the things that we do is we answer all calls. 97% of our calls are answered within 3 rings. 90% of our clients who call us, they get first call resolution. So the case is to the bank is you want somebody that's there to support you and make you look great to your clients, not just check a box that we have merchant processing.
So your sales force out knocking on doors of financial institutions across the country. What is the primary reason why an institution may not change or may not implement your services? What is the reason they give for not moving forward?
So, Jim, you asked why people would why would they not want to work with Basis?
Right.
And one of the things that we see is they feel that there's safety by going with the biggest processors. We were ranked one of the 20 largest in the country for card not present transactions. We are wholesale. Anything they can do virtually, we can do. We're going to have the advantage of service. And one of the things I feel that's really interesting about that is what is it that the bank is selling? The bank is selling their services that they know who their client is, that they care, that they're going to think out of the box. They're going to give unique answers, not just a one size fits all. And yet when they go pick a processor, that's who they hire. So really the thing that we hear is they want to go with the biggest because they feel the biggest is the safest. When quite honestly, it's the exact opposite. It's a culture that matches the bank that's going to be the safest and why they should choose us.
Yeah. It's interesting because you look at this and some organizations don't offer the services at all. Other ones have longstanding relationships. But the reality is, I think we put things on the back burner. We, as you said, people are used to using who they use without realizing what's out there. So are banks accidentally training their best commercial clients to leave by offering subpar merchant services? I mean, what is a you've mentioned about the calls, the ability to have calls immediately and things of that nature. What does a subpar merchant services practice look like?
One of the things that we see is how they handle customer calls. I have been to several of my competitors' offices, and there's something that's really interesting that I see. And there's this giant clock on the wall. And the first time I got there, I was like, what is the 30 minutes or whatever? What does that mean? And I'd always grown up in privately held companies, regional companies, and I'd never seen this thing. They said, oh, that's how long people wait before they get a hold of somebody when they call. And I remember going the first time like, so you mean that person's on hold for 30 minutes before they talk to somebody? And the first thought to go through my mind, they're mad by the time they reach somebody, even if it was just a small question. So I thought to myself, that is the opposite of how I want to treat my clients. What would happen if I were to put the clients first, my strategic partners first, my employees first? Will the profits come? Will success come? And what I found out is that our attrition rate of clients, or our retention rate of clients, is much better than the industry averages of clients that continue to process. Because there is about, we see 6 to 8% of our clients, just industry wide, 6 to 8% of clients stop accepting credit cards or go out of business. Of those that continue to process, we keep over 90% of our clients every year in an industry that averages closer to maybe 75% or in that area of overall client retention. So we have found out that by just doing the simple things, answering the call, caring, all of our customer support is right here in our office in Kansas City. So your call will be answered by somebody here that understands the concern, knows the client. And because of that, we have seen that this huge investment in taking care of our clients and our team and our partners, we have much higher client retention. My dad had a saying as a kid, and he used to tell me it's a lot easier to keep a client than to go find a new one.
Oh, that's for sure.
That's our strategy around basis. We're going to do whatever it takes to make them happy so that they stay with us. And part of that is also shown with our bank clients. There's a lot of mergers and acquisitions in banks this day and age. So considering those that stay in business, last year we had a 97% strategic partner retention rate. I don't know of any of our competitors that could say that. Yeah. And we're very proud of that.
You've seen banks of all sizes and credit unions of all sizes try to build and improve their merchant services program. Among your customers, there's ones that do it extraordinarily well, and there's ones that maybe just don't do as much. What separates those financial institutions that leverage what you provide the best? What do they do differently than those that maybe don't do as well? And is it the resources? Is it strategy? Is it something else entirely? Is how they work with you?
Jim, I love that question. And I have a clear answer to it. Culture. Culture of the bank is everything. A lot of banks we see, there's the sales banks that are actively growing and want to do good and improve constantly. And then there's the passive cultures. So when we look at banks that are struggling and those that are succeeding, it all goes back to the culture. What is it that they want to do? And we can help with that culture. We have found out that 87% of our banks have a growing portfolio, where when we go to meet new banks, the majority of new banks that we're meeting have an attriting portfolio. They're having less clients than they had in the past. So we can really help with that culture. We have extensive training that we can provide. We have Basis University, online training courses. We invite the banks to Kansas City to train at our facility. We have a 100-person training facility right here in our building, actually about 10 feet behind me, actually. And we invite people in. We will work with the teams and do that. Another thing that we'll do is we will work with them on marketing. For banks that succeed, they actively are getting the word out there. A lot of their customers don't know that their banks have the latest resources. Do they have the kiosk that they need? Do they have card not present solutions? Do they have level 2, level 3 software to reduce the cost of interchange that they are paying? Do they have the ability to lower the risk in these transactions? Those are the things that we really need to get out there and market. And one of the things that we like to do is, I call it marketing in a box, but there's a lot more professional term for that. But we will actually do branded things. I'm actually going to pull out a little. Am I allowed to use props in this, Jim? Because I'm about to do it. We've got this right here is a product that we mailed out to banks. Or what we'll do is we'll work with banks and we will mail our partners co-branded marketing materials. We have lots of ideas like that. So we can let their merchants know what we're talking about. They know who their merchants are that aren't processing with them. We can mail them postcards. We have postcards that the bank can brand themselves to tell them we offer these services. And then we get real creative with things like the cereal boxes. We have about 10 other ideas like that, where we mail out to the bank's merchants and their clients really unique products and follow it up with a phone call with the bank and someone on our team, which is another option we have, is what succeeds. There's a big thing with banks. Some banks, they want to do all the sales themselves and they just want us behind the scenes. Great. We love that. Some banks want to do all the sales, but the processing side, the technical aspect, all the servicing afterward is too complex. They want to part that out to us. Great. We love that. Then we have other banks that say, you have a true sales culture. You can do our sales and service for us. And we take everything off their plate. We'll work anywhere in the middle with them. So the banks that really succeed versus those that struggle, the ones that will work with us, we have hundreds of strategic partners. We can utilize what works using our marketing program, and we can actually have a lot of wins together.
The competitive battlefield in banking is intense, and there's financial institutions of every size. For those who are listening to podcasts that are community or regional banks and they're competing against larger nationals, fintechs, non-bank competitors, can merchant services actually be a competitive differentiator in their portfolio? And what would a strategy look like that might be in practice?
Yeah. That's a really good question, because so many banks have just accepted that their portfolio is going to continue to get smaller every day. And if banks are not being proactive, that is exactly what's going to happen. Fintech, like you talked about, are banks losing businesses to the fintech? Yes, they are. There's a lot of buzz around these companies. They have stadiums named after them. They have really cool logos. But you know what they don't have? They don't have the relationships with the bank's clients. That is what's missing. They don't have individual solutions. What fintech is going to offer, the biggest fintech companies, here's a solution. You can grab it, you can build it, take it, work with it. But if there's a problem, an issue, a concern, good luck getting service and support in most cases. That's where the bank, partnering with somebody like Basis, we work together to give individual solutions and grow these relationships. We had a client, an international client, they had built their own ERP, their own accounting solution. And it was completely from scratch. We used our gateway, custom built APIs. We built them for the customer so that way they could process. This is a client that's processing millions of dollars a month. It was a fantastic investment for the bank and us to partner together and do it. That is something that, as cool as the fintech companies are, they're not going to get into the weeds like that and save a merchant like that. So yeah, I think a lot of banks have just taken it that they're going to start to lose merchants, but they don't have to. Again, I think I'd said this stat earlier, 87% of our banks are actually growing their portfolios with us.
Yeah, it's interesting. One area that seems to trip up leaders right now, financial institution leaders, is the complexity of the business, the regulations, the security, the technology, all the changes that are going on. This is just as true in the payment processing area. How should bank leadership approach the whole issue of these challenges without getting overwhelmed? Should they rely on their partners to help them get through the whole morass of what's going on out there?
Yeah, the complexity is not going anywhere. That is something that we absolutely are aware of. It's here to stay. And when I got in the industry, there were 58 rates of interchange. And I remember the people that were my age at the time were telling me they remembered when there were two: card present, card not present. Now there's well over 1,000 different rates of interchange. And what the merchants don't realize in a lot of cases, they just want to say, oh, I want interchange plus. The thing is, what is interchange? What can we do to reduce the risk of those transactions? What can we provide to the card brands, MasterCard and Visa, to make this transaction a better known transaction, provide more information, and reduce, in some cases, the risk of that transaction? And by doing that, lower the cost for the merchant. Effective rate is everything in our industry. What is the overall rate they're being charged? And so many clients just want to go after interchange plus. That is not really what is best. For some merchants it is, for some merchants it's not. So when we're talking about complexity, Visa just announced changes to level 2 and level 3. This will have a huge impact on card not present clients taking B2B. It's huge, it's game changing. Those that don't keep up with it, they are going to see significant rate increases for their merchants. And we're not just talking about 5, 10, 20 basis points. I'm talking real numbers here. So when a bank is looking to pick a partner, I really think that they have to be careful that everyone is going to promise that they're going to be the best. And complexity is going to get more and more, to answer your question. So what they really need to figure out is who is going to help them work through the complexity as it changes. There's a lot of legislation. I've actually met with a couple of senators and Congress people to figure out the legislation that's coming down for our industry and talking to them to try and understand what is coming down. And there is legislation very possible for banks. As we all know, it's going to continue to get more and more. Are they partnering with a company that is actively ahead of it and meeting to find out what these laws are going to be before they even pass, so that way we can be prepared for it, which we do? And are they working with somebody that really understands how to best handle these changes? One of the things I recommend to any potential client when they're looking at picking their processor, we've established it's their reputation on the line, and it's more than just growing revenue. Every salesperson that meets with them is going to say, and I'll ask you, Jim, have you ever had a salesperson not come to you and say, we're the best?
Oh.
They're all the best.
Yeah.
Right. And you have 4 people pitch a product to you and they're all the best. Well, I don't know if one of them's lying or if one of them just doesn't know what's going on, or maybe they are just the best in different areas. But the best doesn't mean that you have bought everybody and you have you're the absolute biggest. What really makes you the best is who the customers say are the best, who has the most loyalty, who has the highest net promoter score. And that's where I always go to potential clients, strategic partners, and banks to say, go visit the main offices of the processor before you choose one. Go fly out there and meet the team, because the salespeople are all saying what you want to hear. Sorry, salespeople, I'm one too. I get it. But what you really need to do, meet the team that you're going to be working with. Go meet with the underwriting and risk. Go meet with the deployment team. Go meet with tier 1, tier 2, tier 3 customer support. Go meet with the marketing team. And then figure out who fits the culture of your bank. That is everything. So when we talk about this market getting more and more complex, be careful what salespeople say. What you really want to do is get past that. And the best luck I've had, fly out, meet with us. We offer everybody that we talk to an opportunity to move out to fly out to Kansas City. We actually won the coolest office in Kansas City. So we actually have a pretty sweet space to come and visit and meet with the people that you'll be working with after the sale. That will help with the complexity, because whatever it is today, it's going to be different tomorrow.
So Brad, when you look at everything that's going on right now in the industry, innovations like virtual terminals, digital wallets, embedded payments, and AI, how will this all influence how banks serve their business clients in the payments processing area, merchant area?
And this is when it gets fun and exciting for me, Jim. It is changing crazy fast. The technology is constantly moving. And companies have two choices at this point. They're either going to fold or they're going to change. And that's what we've decided to do, is to move forward and to be a leader in the industry. And embedded payments, I don't even really carry plastic anymore. I use tap to pay.
Right.
And this is kind of fun and I love it. But you have to build the technology behind there to support what's coming down the line next. So really, when we're talking about this, for us, it is our point of sale integrations that we have. This is one of the first things that we talked about. That so many banks just hear, we're with an industry-specific point of sale. They don't have an integrations built. That's what we do. We have a whole section of our building where we build integrations into these things. We have custom APIs that we'll do. We built APIs into QuickBooks. We built APIs into hundreds of strategic partnerships. So instead of a bank just having to hear, sorry, we can't work with that product. If that software will allow us to, we will build the APIs, we will integrate, and we will help that bank get the merchant.
Interesting. Again, whatever we know today may change tomorrow, but I think it's important to realize that the whole merchant processing business has evolved quite a bit. And I don't think as an industry or as an institution, we can afford to let go of any service that builds a tighter relationship, stops attrition, builds the relationship and trust level higher, because there are competitors coming at us from every angle. I think it's important in any product area, but especially in the merchant, small business, and payments area, where change is happening so quickly. When we look at change and what's going on in the payments area, I do recommend that people not only listen to this podcast multiple times, but also listen for more insights in the future of payments and merchant services on the Banking Transformed podcast.